Let's talk some real estate. Peter O'Malley is with us from Harris Partners to see how the real estate market is faring. How are you, Peter?
Good, thanks, Warren. How are you?
I'm very well. You're a busy day, of course, Saturdays in real estate,
It's
isn't
a very
it?
busy day.
Yeah. So finally we've had a halt on the interest rate rise. Is that having much of an impact?
Leading into that paused interest rate rise, or interest rate decision, I should say, Warren, we saw the market stabilising. So if you look at CoreLogic's numbers, Sydney has actually recorded a very modest rise in property prices, both for apartments and houses, over the last 6 to 8 weeks, which is a welcome relief for vendors.
So, I mean, in amongst all this market we've been talking about for a while now, how's that sort of dealing with or impacting on sales volumes?
Sales volumes are well down, as are listings volumes. Right. The fact that vendors are so hesitant to come to the market has inadvertently created strength. I think if there was a surge in supply at the moment, the price falls would resume. And I'm saying to my clients, this creates a window of opportunity. Listings on markets are very low. As I've just described, there's statistical evidence to suggest the market's rising modestly. So if someone did want to sell and sell inside the doom and gloom of the supposed mortgage cliff, now's probably a pretty good time to look at it.
You can see why, obviously, though, people are holding off if you don't have to sell, thinking, well, the market's down a bit. Maybe if I wait a year or two, that'll be resolved.
That's right. And look, the sentiment of the day is actually more savage than the reality of the marketplace at the moment. No doubt in 2022, the sentiment was justified. The market was actively falling. But so far, once we came out of Christmas this year, there was stabilisation signs in the market.
Okay. Now, the rental crisis, it's a catchphrase almost that we've been hearing in news for a while now. And we're starting to see, of course, international students come back after COVID, after the pandemic. What sort of impact is that going to have?
It's a rental crisis for tenants, understandably, and I have great sympathy for tenants on that front. But it's been a rental boom for landlords, and the property downturn would have been much more acute were it not for the rising rental market, which has offered a lot of homeowners protection, Warren. Yes, the international students and the reopening of the international borders this time last year are the primary cause as to why the rental market has grown so strongly in the last 12 months. I was cautioning a lot of people last year that we had not experienced a rental crisis last year, that it was just the rental market was recovering. The rental crisis in terms of prices for tenants actually happens from here, because clearly the federal government are determined to flood the state and the country with additional population growth from overseas, and that's going to put great pressure on the rental market.
Yeah, well, that says a lot, doesn't it? But we'll stick to real estate. If you're looking at buying a property now, obviously the market's down a bit, but would that mean that particularly you're not going to have a problem getting a tenant, making investment properties quite attractive versus a property you live in?
Great question. Yields are improving, but investors have not come looking for those yields at the moment. So I suspect you'll see investors re-enter the market en masse when they see further signs of stabilisation in the property market. But yes, you've probably seen yields double in Sydney for investment properties in the last 12 months, which is setting up an investor play.
Okay, I know when we last had the global financial crisis, which is a while ago now, I know, but that ended up impacting real estate with people selling their holiday houses and all that sort of stuff. COVID's been interesting in terms of regional Australia in a different way, that some people have decided, well, I'm not working in the office, I'll get out of the city. Is that continued, or are some of those coming back now?
No, there's definitely a return to office mentality, both from employees and employers, and that is further putting pressure on the rental market as people come back into Sydney. I think the regions have probably had their run in terms of price growth for the time being.
Yep.
There was a boom as a result of COVID. I think the only meaningful demographic, if you like, that might continue to head to the regions is the baby boomers that have had enough of city lifestyle.
In terms of retirement, more people retiring out of Sydney.
Correct, that's right.
Yeah, okay. Well, you can see why in many, many ways. But then again, if you've got your family's your family if it's nearby. So it's a difficult decision for many people, I suppose.
Look, that leads into another point, Warren. I think anything that's along the coast of Sydney, for example, that's within 90 minutes. So, when you're talking Newcastle, south from Newcastle and probably from Sydney down to Kiama, all those coastal areas in between are going to do, continue to do very well.
Okay. So finally, given there's a lack of stock, as you've described, is now a good time to sell, even though the prices are down?
It's a better time than what it was in 2022. And we don't know what the mortgage cliff represents for the market going forward. If you look at a graph of the fixed home loan rates that are expiring from 2% and need to be refinanced from 6%.
Yep.
It accelerates from this point on.
Right.
Nobody really knows how the market is going to absorb this mortgage cliff.
Yeah, which we've been hearing about since the end of last year, but now it's crunch time, I suppose.
It's upon us, that's right.
Yeah. Well, Peter, thank you so much for that. Michael will be with you next week.
Look forward to it. Thanks, Warren.
There are some real estate. Peter O'Malley from Harris Partners.